Greetings traders, welcome to my trading journal. Today I would like to give you a last update on my Ironfly trade. Yes, today I did close my entire trade with profit of 10,000 rupees. So I will try and put all the rationale behind why did we take the exit today, and I will also try and cover all the adjustments that we have had in this trade in this video. So I would request you to watch this video till the end. So why did we decide to take a exit on this trade today? Why didn't we wait for another 2 days to get it expire, as we were so close to 17,300, which is where our straddle is placed? So there are a couple of reasons to it. Reason number one, though Nifty is exactly where we started on 26th of November, right? It is very close to 17,300, and that's exactly the reason why we are getting maximum profit. But then if you look at all these candles from that 26th November, most of these candles have been quite volatile, right? If you mark their day high and day low, they are traversing through more than 300 points, and if at all that thing happens in next couple of days, we just don't want to lose whatever credit that we have received so far. We just don't want to give it up on that. That was the reason number one. Reason number two, if you remember our trade, the maximum point that we were planning to collect from this trade was around 360 points. Because of some adjustment, we came down from 420 points to around 350 points, and out of which we have already collected more than 200 points, right? So we are just left with 100 points of worth of credit. But to get that additional 100 or 150 points of collection or credit in next couple of days, we just don't want to lose the 200 points that we have received so far, right? So that was the reason number two, why did we take exit on this current trade today. Now let's go through the entire journey of this trade, starting from the entry and to the exit, one by one. I'll try and cover everything possible that we have had in this trade. Before that, if you have not gone through the playlist of this entire video journey of this particular trade, I would recommend you to go to my channel called Strangles, and you can go through this Ironfly December 2021 playlist, wherein I have tried to cover every possible adjustment that we have done and the rationale behind it in greater detail. So if you have not done that earlier, I would recommend you to go and check out all these videos. So point number one, the entry was the most important thing for this particular trade. So if you have gone through the price action of this particular underlying, that is Nifty had on 26th of November, Nifty had slid down, and that is when the VIX was very high, right? So if you have seen, the 17,300 level was something which was breached after a long gap of almost 2 months, and that is when the VIX shooted up like anything. It was the VIX was around 20 at the time of entry, and that's when we had a very good premiums at 17,300, right? So if you have looked at my previous videos here, wherein I've explained this in greater detail, but then these were the premiums that we were getting on that day, which was around more than 600 points, and that's when I've decided to enter into this trade. So 628 points were the credit received, which allowed me to take my hedges at 600 points apart, giving up 208 rupees, collecting around 420 points as a total credit. And since my the width of the spread was 600 point, I was looking at maximum loss of 180 points on this particular trade. Things didn't go as per the plan. On a very second day or third day after I entered into the trade, because of this Omicron new variant threat, Nifty did slide down a lot, right? Touching our lower break even. So this is our straddle center, this particular line. This particular line is our higher break even point, and this is our lower break even point. And as per our rule set, it did cross our lower end point, and that's when it triggered our first adjustment, right? So our first adjustment was to move up our hedge from 16,700 to 16,800. I have talked about this, the rationale behind moving up this hedge inside in one of my previous videos. I would recommend you to go and watch that. But then what that has done to our trade is we have been able to cap our maximum loss on the P side from 180 points to 117 point, giving up additional 20, 21 or around 31 points on our maximum profit. But then most importantly, we have been able to cap our losses from 180 points to 117 points on the P side. That was our adjustment number one. But then to our surprise again, that was the worst possible time to do this adjustment. After that, Nifty did recover, and it did recover really well in coming few days, and it was hovering around 17,300, and we were looking at good profits at this point. Again, it tried to come down here on 6th of December, but then I wasn't much scared about it at that time, because one of the adjustment we had already done to mitigate the risk on the P side, right? So again, our guess was right. Nifty did recover after that, and it did cross this 17,300 point one more time. And this is when I decided to do a second adjustment, wherein as per price action, it looked like this is a trend reversal, and why not collect some credit from the put side. And that's when we shorted 16,000 put to receive additional 28 points of credit, right? And then after that, Nifty was hovering around this 17,300, and on 13th of December, that's when it was the call side was was being challenged at that time. But then fortunately for our trade, Nifty did come down, and it started trading at 17,300 again until 17th of December, right? But then again, due to this Omicron threat, after 17th of December, there was a huge slide from 17,300 level to 16,400 level because of that threat again. And that's when I decided to take third adjustment. Due to this 1,000 points of fall in couple of days, my 16,000 P, which I shorted to get some additional credit of 28 rupees, did inflate a lot. It from 10 rupees it went up until 80 rupees or 84 rupees. That's when I yeah 84 rupees. That's when I have closed this position, right? And then what did I do? So to recover those 28 and 84, if you do the maths real quick here, so I took a loss of 56 points here, but then to recover those 56 points, I moved my hedge back from 16,000 to 15,800 with 4 lots, right? 23 points with 4 lots. I did apply a martingale strategy because I just wanted to recover all the losses that we have incurred into this 16,000 P. Also, when Nifty was sliding that 100,000, 1,000 points down, I tried to collect, few more points from, call side, and I aggressively shorted this 17,200, call with 4 lots to, basically recover the, the 80 or 54 or 56 points that we have lost it here. But then to our surprise, to everyone's surprise, I would say, Nifty did recover, and it did, completely V-shape recovery. And that's when, I started to lose a lot of points on the 17,400, which was, which was having 4 lots, right? And I again moved back from 17,200 to 17,400, and from 17,400 finally I was sitting on 17,600 until this morning. But then due to this entire V-shape 1,000 point slide, and again around 600 700 points recovery, I did manage to get all my strangles right with appropriate martingale strategy. So if you calculate this 2700, this 4,000 2,000 loss, I did manage to cover all those losses with 15,800 P, 16,200 P, and even 15,400 P, right? So whatever losses I have incurred in sliding down or rolling up my put and call, I did manage to get them recovered from similar strategy on the other side of the strangle. After this V-shape recovery, the journey was not that easy. Again, there has been quite volatility apart from the last expiry, which was quite mum. But then there was again 300 points of traversal in either of direction yesterday and even today, right? So but then I didn't do much adjustments here because Nifty was going up to the straddle center. It was basically giving us some handsome profits on our MTM, right? So this is where today this is where we exited our trade with 10,000 rupees of profit. The margin deployed on this particular trade, if you just talk about the Ironfly trade, it was not more than 1 lakh of rupees. But then if you consider the martingale strategy that I have applied to manage this V-shape recovery, it took additional 2 to 3 lakhs of margin to stand up some of the strangles with 4 lots. But then yeah, because of that I did overpower my trade just to manage my MTM losses here, because until this point I was looking at 5,000 rupees of profit here. But then because of this 1,000 point slide, my MTM went from plus 5,000 to minus 5,000, and again here I was looking at 2,500 rupees of profit. But just to manage this particular slide, I had to deploy additional 2 or 2.5 lakhs of margin to overpower the trade. and to recover the losses that I had on my 16,000 P, which I had initially shorted to as part of my second adjustment to collect additional credit from the put side. But then that's part and parcel of every trade. You have to do some trade-offs, and that's the reason we do not really want to deploy entire of your capital here. If you really want to do some firefighting with your trade, you should have some additional capital in your account, so that this is how we can utilize that margin. Some of the good things I did with this trade, to mention a few. Number one, my entry was quite right. I did get a good premium because the VIX was high. That is number one. I did not lose my patience even when Nifty was quite volatile throughout this journey of this trade. Every day's candle, if you look at it, it was more than 300 points, but then I kept cool, and I did not do unnecessary adjustments. That is number two. I did manage to get I did manage this V-shaped recovery quite well, and I believe my exit was also right, which is today, which is very close to 300 17,300 points where our straddle is placed. Some of the things which I could have avoided is about this in managing this V-shaped recovery, but then that is bound to happen, right? When Nifty was sliding 1000 point, I was very quick to come from I aggressively shorted this 17,200 call to recover the losses on this 16,000 P, which really backfired me with V-shaped recovery of Nifty, right? Not just is 17,200, even that has hurt my position on 17,400. But then that's how the market is, right? You really have to be ready with all sorts of actions from Nifty, either going down or going up. You have to be ready with all your all your adjustments, and I could have done that really well. I could have managed to I rather than shorting 17,200, I would have started I should have started with 17,400, right? But then I was really very scared because there was a Omicron threat, and market in 2 days it went down from 17,300 to 16,300, and VIX was almost more than 20. That's when everyone along with me, everyone was staring at 16,000 and way below that, right? That's when I decided to short 17,200, which really backfired me. But then that is something which I think I should have managed it well. I hope I was able to demonstrate all our capabilities, all our learnings on how to manage different trades, how to manage psychology, price action, different adjustment styles that we have deployed here, the capital management, the entry, exit. I tried and cover everything possible that I have learned or last couple of years that I have been learning. I tried to put everything into this trade, and I really wanted to put this as a journal, so that even in future, if at all I come across a situation like this, I should be able to refer this and do adjustment accordingly. And I would really like to give it back to the community where I have learned a lot of these adjustments which I have deployed over here. So thank you very much again, whoever is watching this series. I hope there has been a huge learning uh, 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 for this particular trade, be it's entry, exit, adjustments, the capital management, the trading psychology, the MTM swings, right? I hope I was able to cover everything possible throughout the journey of this trade. So thank you again. Thank you again for watching this entire series. If you have not gone through the series again, you may just want to go through this Ironfly December playlist on my channel called Strangles, and you should be able to get everything right from the entry, the adjustment plans, the first adjustment, second adjustment, different updates on how my MTM looked like at the various stages of this trade. So please check out all these videos to get a lot of learnings along the way. Yeah, this should be one of the biggest videos in this particular series, but then I wanted to summarize this entire trade in one video. But then if you want to see the detailed explanation of every adjustment, the rationale behind it, and the deployment part, the psychology behind it, everything I have documented in all the videos in the playlist I've just talked about. So please go through it. So thank you very much for going through this playlist, and I will come up with next set of trades in my next videos. Thank you very much.